Christyan, your first reaction to this, you were looking for cuts. Let's deal with size first. Is this a number you were looking for?
Absolutely. In fact, the way I look at this is the Saudi lollipop has become the OPEC lollipop. And I think in that vein, what's important here is that all of OPEC has recognized that speculators are not conducive to stability in investment, and therefore controlling that price, making it conducive within a range that's healthy is the key. I know we're looking at deficits. I'd sort of say they're not trying to force a deficit, they're not trying to force the price higher. What they're trying to do is protect the price in a range that's healthy for everybody.
Can you talk to me about distribution? Just how important is that, just in terms of price? Does it matter at all?
In terms of distribution of the cuts, I mean, I think ultimately what Saudi's done is led by example. Prince Abdulaziz is a great negotiator, and I think the whole of OPEC has now, I think a milestone has been achieved here, right? So first of all, the baselines, this has been 2 years in the making. The exam results are out, and everyone's abiding. Let's see where it all falls. But then to get the baselines right is critical to then understanding the quota, the compliance, and what that actually means. There's no point having quotas when the baselines are wrong. So I think the milestone here isn't necessarily just the 1 million barrel extra cut that we called for 3 weeks ago. The milestone here is that everyone's on the same page in terms of accountability, which if you're trying to be the central bank of energy, that is key.
Let's think about next year and what's on the table right now. So this morning what we get is some better visibility on the future of supply. Then you've got to think about what the demand picture looks like. Based on that, going into next year, is this the deficit that you're looking for?
I think so. In fact, actually, it's more than that. What they're trying to do is preempt, de-risk any potential downside to demand. Demand's going to be okay next year. I think there's been a huge amount of concern around demand. We see it around about 1 million barrels a day of growth. Actually, what's more important is what happens if we see, a car crash in terms of a COVID unwind, in terms of all those cash savings become negative for demand all of a sudden in Q2, Q3. What happens if we see a little bit more volume from GOM, from Brazil, from shale? In that scenario, this cut is key. Now, so in some ways, it's not just mitigating potential demand risk to the downside, it's also mitigating any potential surprises to the upside, particularly in Venezuela, Iran, and Libya, where we've seen more volume than we necessarily expected. So this is about fine-tuning as opposed to some massive preemptive strike on something major that's going to go wrong. Fine-tuning, I think, is the key theme here.